Good morning and welcome everybody. This is our final mini-series event for Market Vision 2020. It is the introduction to the DecisionPoint Analysis Process. Our speaker today is Erin Swenlin. Erin is the Vice President, Chief Market Analyst, and Co-Founder of the DecisionPoint.com website. Along with her father, Carl Swenlin, she co-founded DecisionPoint. She launched the DecisionPoint Daily blog in 2009 alongside her dad, and now is publishing both the DP Alert and DecisionPoint Diamonds reports to the new DecisionPoint.com website. She also serves as a consulting technical analyst and blog contributor at StockCharts.com. Erin is an active member of the CMT Association. She holds a master's degree in information resource management from the Air Force Institute of Technology, as well as a bachelor's degree in mathematics from the University of Southern California. And I can tell you personally, I had been called by Chip Anderson at StockCharts a couple years ago, and he had a vision with StockCharts TV, and he asked if Erin and I would co-host Market Watchers Live, which was their flagship program for a couple years. So Erin and I go back a ways. We've worked quite a bit together over the years, and really a pleasure to have Erin with us today, wrapping up the last mini-series event before our big event tomorrow. Erin, welcome.
Thank you so very much. Yeah, it's a big day for us here at DecisionPoint because we actually just launched DecisionPoint.com, so it's all ready for prime time. Well, at least I hope it is. So I thought I would tell you a little bit about that, about our new website, as part of my presentation, and also, of course, during that, give you an idea of how I do my analysis using our DecisionPoint analysis process.
Well, that's very exciting. I mean, that's a pretty big development heading into a new year and a new decade. And I know from having worked with you and a lot of the scans and so forth that you use, that there are obviously going to be a lot of opportunities there. So definitely excited to hear about that. I just want to let everybody know these mini-series events are educational events. What we're trying to do is to have everyone get to know our speakers a little bit better, maybe a little bit on a personal level, and maybe learn a little bit about their trading strategies and their styles. That's the whole purpose of these events. I hope you've enjoyed them. This is the last one, and I do want to give a shout out to another Erin, my daughter, who has helped put this whole thing together. It's really been a collaborative team effort. Everybody at Earnings Beats, plus all the speakers and the help that they've given us throughout this process. But Erin has kind of been the central piece, responsible for the newsletter that's been going out, sharing a lot of interesting facts about each of the speakers, which I think is kind of interesting. And yeah, so she's done a great job. And if you want to tell her what a great job she's done, you can certainly do so at Erin at earningsbeats.com, or just send it into support@earningsbeats.com. But she has done a great job. I just wanted to shout out, give her a shout out for that. And now it is time, Erin, and now I'm going back to Erin Swenlin. Yeah, I have so many Erins in my life. Sometimes I get confused.
It's a beautiful name, so.
Yes, it is. I agree. I did read through the newsletter, though, and one of the things that my daughter, Erin, has been sharing, everyone's given some personal information about themselves. And I know you're a big Anaheim Ducks hockey fan. We talked about that a lot during the show that we used to do. But I read through all your facts. And first of all, I mean, I knew you liked to travel, so the whole Italy thing wasn't a big surprise for me. But I had no idea this oil painting iPad app. What in the heck is that?
Well, I hate to do any advertising for any particular apps, but yeah, it is so relaxing. So you put it on, and honestly, it's like paint by number. They have like 99 to 150 colors. Okay. And yes, and so you go through the little, you can highlight certain areas, and you just tap the area, and it puts in that proper color, and then at the end you have this beautiful picture. So I don't print them or anything. They're just in the little album that I have on my iPad, but absolutely the best app for me right now, just to keep my mind clear but relaxed at the same time.
I need one of those apps where you can just like click on a stock, the right stock to go into the portfolio. You just click on it and it just goes into your portfolio. But I want the ones that go up.
Yeah, exactly. I think we could come up with a really great app, Tom.
Yeah, that would be awesome. We had some of those moments on Market Watchers Live where we both would agree on a stock, and that generally was a good sign because we looked at the market a lot different.
Mm-hmm.
So anyhow, as far as the presentation today goes, I did want to ask you a question before you get started, and that is with the questions that come in from the audience. Would you like to go over those at the end? Would you like for me to interrupt if I think it's a good point in your presentation to
Sure,
bring
if
them
you
up?
want to interrupt, I don't have a problem with that. I remember how doing the show before, it was really nice to be able to give questions as they came in. So we'll see how many come in. And once I get to the part where I'm showing lots of charts, I'm sure that that's going to be the part where we get most questions. The beginning won't be quite as full of questions, I think, for people, but I'm totally ready to answer whatever anybody has to ask.
All right. Well, I am really pleased. It's a pleasure to have you joining us today. Again, all of these mini-series events have been awesome. So I do want to thank you for taking time out of your day to come in and explain how you look at the market and what you do at DecisionPoint and so forth. I think this will be great for everyone. And I will I'll monitor the questions, and I'll try to interrupt you as appropriate. I'll try not to do it too much, but we'll see what comes in. But again, thank you for being here, and I'm going to let you take the stage, take the screen, and off you go.
Right. Let's go ahead and get started then. Like I said, I'm super excited because I'm going to get to share the website with you guys. The first to see it, really. So I think you're going to enjoy it, and I think we're going to be very successful. We've really done well on stock charts, and we still have our indicator sets that are over there. So our charts are generated by stock charts, but now we're a little bit more separate by having this new website. So anyway, let's go ahead and let me make this so that it's easy to see. Does everything look good?
Everything looks great. You're ready.
Awesome. Okay, so DecisionPoint.com analysis. So as part of kind of giving you a little bit of a step through our new website, I was gonna, it really goes into the analysis process we do, is exactly how we set up the website. So as I go through some of the things on our website, it will give you it'll clue you into my analysis process, but depending on how much time I have at the end, I will go ahead and look at some of the chart lists that I'm going to talk about and give you a little bit more insight into what we do. My father, Carl Swenlin, of course, is also involved with DecisionPoint and DecisionPoint.com. And my mentor, my tutor, certainly gave me the strong basis I have in technical analysis, not only the CMT, but then also just getting that knowledge from him since high school. So I don't know how much your daughter, Erin, expressed interest in what you did, Tom, but I was fascinated by it at an early age. And although I ended up in the Air Force, I still always had in the back of my mind the stock charts that we used to do in his office. I mean, he had, it's all on paper and pencil. So I calculated the OBV for him every day with a ruler and Barron's or the Wall Street Journal. So lots of experience and time, but here's a little bit more about myself. Right now, we still are on Stock Charts TV. We have the Decision Point show there. And I also work with Mary Ellen McGonigal, who I think you've already had probably a month ago. I think she told me she did one of these series. And I look forward to actually seeing her tomorrow as well. But we do a show called Wealth Wise Women, and it's not just for women. We just happen to be wise on wealth. And so we're the Wealth Wise Women, but we do have not just women who watch the show, and I definitely would invite you to check that one out. You kind of went through my education and professional association, so I'll just skip over that and get to the meat of what we're going to do here. So I wrote this as our mission statement, but I think it really does give you kind of the crux of what our analysis process is all about. And that is, you know, when we're investing, there's really two things you just absolutely have to know. And in our opinion, you have to determine the trend and condition of the market, because, you know, you need to know which direction the market is, you know, where is the wind? Is it at your back? Are you going into it? And so you have to know what's going on with the market in general. But then after you've done that, then it's time to select those stocks that will ride that tide, be it going down or going up. So in previous diamond reports, I've been posting those for free on stockcharts.com. Our DecisionPoint alert is still, there's still some there that are on stockcharts.com for free. And we will be still kind of posting some of that material over to Stock Charts as we build up the website blog roles, but there will be paid content in there starting on Monday. So definitely excited about that. So what do we start with? Like I said, trend and condition, big picture analysis. You have to know what's going on, the weather patterns above those trees. You need to know which way you have to go on that trail, which way the market might be, what trail the market might be taking. So it's very important to get that big picture upfront analysis. And so that's really what we do with our DecisionPoint Alert report. And it contains a market overview. So we give you pretty much what we're looking at in terms of what's going on with the S&P 500, the markets in general. We do have a global look. We show you what the overall market trend is using our DecisionPoint trend model signals. Also, we look at the overall market condition. What are we seeing as far as momentum, volume, breadth, all of that, and we look at those as well. And then of course we have our DP indicators that we've developed that you can find, like I said, on stockcharts.com. But we've come up with these indicators. They've worked for us for many, many, many years, and they help us determine what the market condition is, as well as, like I was mentioning, our price momentum oscillator, the PMO. Very similar to the MACD or PPO. And if you wanted to learn more about the price momentum oscillator, I do have a YouTube video out there that I believe you can still get to that'll tell you all about our price momentum oscillator. And then not only do we give you the market overview and trend and condition, but we think it's important to look at what we call the big four, which is dollar, gold, oil, and bonds. And so we have a section on all four of those with the charts and our analysis every day in our DecisionPoint Alert. So for those of you who are familiar with us on stockcharts.com and have read our blogs, and I suspect a lot of you are, based on what I remember about earnings beats and the crossovers we had with them. So, I mean, the thing is that if you liked what we did for free on stockcharts.com in our DecisionPoint blog, you're gonna love what we do on our website, because rather than 1 or 2 DecisionPoint alerts a week, you're gonna now get 5. So every day I'll be writing a DecisionPoint alert to give you all of this information every day, so that you will be completely up to date with what's going on in the market overall. And there you go, the big four. So once I've done that and I understand what the market is, my job from there is to find what I call diamonds in the rough. So as you can see in the picture, everybody's sort of looking around, trying to find the good gem. And there it lays, where most people can't find it. But my job is to get that and find that diamond in the rough for you. And so that's really what I'm doing when I do my DecisionPoint diamonds report. And it does say daily. I have to fix that, because I can't promise you every day I will have 5 diamonds, because it does get, you know, I don't want to just throw out stocks just because of the fact that it's Monday and I need to write a report. If I only see 2 or 3, that's what I'll give you. But if I see 5, we'll do that. So how do I get these diamonds in the rough? I derive them from those DecisionPoint scans that Tom was talking about. And a lot of those you can find in my blogs from before. At this point, I'm kind of keeping most of them a little bit closer to the vest. So if you got them from me before, congratulations, because they're not going to be as widely available as they were before. But you can still get my diamond scan, which is my PMO scan, and I do have a link to that, a free link to that on our website. So I go and I look at these decision point scans, I run them, and then I look for the best stocks and ETFs that come out of those results. And some days it could be 150 that I'm going through to find G5. It can be a really difficult day, but I have a lot of different scans. So if one is just giving me too much, I can narrow it down, again, based on what's going on in the market, and it'll do it for me. It'll take some of those results and make it a little less difficult to go through all of those. So basically what I'm saying is that I'm doing all that work for you. And so I mine those results to get those best stocks, and then I give you detailed analysis of each of those diamonds in the rough. So really the point of what I'm doing with diamonds is not, I mean, I guess you could consider it a stock pick, a newsletter, but that's really not my primary you know, that's not really what I'm going for. What I really want to go for is, as a lot of people who do know me, is I love to teach. And so when I write these, I'm writing it for those who maybe aren't as familiar with chart analysis. But it also, of course, is going to be interesting to the experts out there, because you're going to wonder, well, why did she pick that? You may not need to know the detailed analysis part of, you know, how all of the pieces and parts are put together, but you get that analysis, you get those stocks, and then you get to start looking at the reasons why I picked them. And I'm very detailed about that. People really like that. I don't just do longs. If the market, like I was hinting at before, if the market is taking that trail to the downside, I will discuss shorts, and I will post some of those. And I'm always at the end of every newsletter, and everybody loves this. I mean, I think I've gotten more comments about this more than anything, is at the very end, I give you that full disclosure. I tell you, you know, if I've gone over a stock that I own, I will tell you that I own it. And then my last line in my disclosure is how much in cash I am currently. So that kind of gives people an idea of, you know, for a very long time there, I was 80% cash. I had a lot of money sitting on the sidelines just because I didn't like the way the market was moving. I still was putting out diamonds in the rough because a lot of you have different risk profiles. And, you know, to be perfectly honest, my primary part of my day is not trading. My primary part of my day is looking at the market, seeing what's going on, and getting that information out to you. So I'm not sitting here at my terminal, you know, watching all day long and going in and out of trades. That's just not my style. My style is teaching. But I'm very honest up front as to what's going on, and letting you know that you know, what I do own and what I don't own, and that how much cash I'm in. The other part of our website that's really awesome, I think, is we do have curated chart lists. And I think one of the things that is nice about having these lists is that you don't necessarily, and don't tell Chip I said this, you don't necessarily have to be a Stock Charts member. You can see all of the charts that we find the most important on these 3 chart lists that we put together. So there's the DP Alert chart list, which is going to give you all of the current DP Alert charts that we use in our DecisionPoint Alert reports, but it'll also include the weekly charts, you know, and the monthly charts that maybe we don't look at every day, but they are there for you to look at. And then our sector analysis chart list, we've worked really hard to put this one together. And it includes, and I'll be talking a little bit more about our golden and silver cross indexes. This is our brand new indicators. And we've we put that on the sector charts, and we of course have the price momentum oscillator on those charts, and we look at the OBV, the scooter, and then we've really found that the percent of stocks above their 20 and 50-day EMAs has been an amazing indicator. And we really haven't given it a whole lot of love, but when we came up with our golden and silver cross indexes, we found that we were getting some great information from this simple, you know, just adding the percent of stocks within a particular group, a market group index. We look at all the components and we determine how many of them have their stocks above the 20 and 50-day EMAs. And that will tell you quite a bit about what's going on in that particular index, more so than maybe you might have thought, but I'm going to show you some of those charts. And then we actually have a golden cross, silver cross index chart list. And one of the things that we came up with when Carl came up with this index that we've been talking about, we figured out how to do it across all of the major indexes out there, market indexes. And I'm gonna, again, I'll show you a little bit more when we actually look at some charts about what those look like and what that index chart list is all about. So before I get to my charts, and I'll bring this up again, but I want to give a special. I'm going to be doing this for Market Vision 2020, but you guys having been to our presentation today will get a little bit of a leg up. But I do have a coupon code where you can get your first 2 weeks for free. We do not run a trial, mainly because all of our reports and the style of our reports are already out there on our stockcharts.com blog from when they were free. So the first 2 weeks you will get for free on that coupon code MV2020 DP. So when you go and check out our new website, and if you're interested in subscribing to either of the DP Alert or the Diamonds or both, you can use that coupon code and you'll get those first 2 free weeks. We won't charge you right away. All right, so let's go ahead and look at some charts, because I think that's probably where most of the interest is. And I know I've spent a lot of time already talking about other than stock charts. So here is that website, decisionpoint.com. Of course, you can learn more about what we do. And here are the reports and how you can subscribe to them. But I do want to mention, we do have a free newsletter. And I think it's a great way to get a feel for what I do. We'll give you information on when we post our free articles around the web, and I will put our videos up there. You'll get a link to our Decision Point show every week, so you can just go straight into that newsletter and just click and get to us pretty easily. And then, of course, if we have any big signal changes, I will also notify those on our free newsletter about that.
Hey, Erin.
Yeah.
Before you get into charts and stuff, there was a question that came in asking whether or not you would continue posting on your blogs at Stock Charts. So I just wanted to make sure you have an opportunity to clarify.
So yes, I will be still posting free content. I believe my father will too, to some degree. But I know, and I'm going to admit to being a little bit sneaky, I started doing diamonds a couple months ago. To give everybody an idea of how they work and what I do in preparation for opening our website. And we got huge response. People love it. So I'm moving that onto the website for paid users, but I will still be posting some diamonds in my free report. I probably, Thursdays, I do my reader requests. So I'm thinking for the reader requests, I will post that diamonds report on Thursdays. And so you can get an idea of how I analyze, but you're not getting my results. You're getting the results of what our readers have thought about. So it gives you a really good idea about what I do. The only difference is that it's, I pick them from the group of what people have asked me to look at. So a little bit different. And I will still be posting, like I said, the major signal changes and charts that I'm finding very interesting. I'm also going to be posting for Financial Sense financialsense.com. They have a really great and rich blog area with lots of great writers there as well. So there will be free material out there, and I really appreciate that somebody out there was kind of concerned that I wouldn't be posting to stock charts, but I will. It's just not going to be, the material will certainly not be as rich as it is on our website, because that's where I'm going to be putting most of my effort. And I don't know about you, Tom, but I did get a lot of people who have talked to me and have expressed concern about the fact that a lot of our, at stockcharts.com, a lot of people have gone off on their own and are starting to charge for their material. And what I've told them is it wasn't something that we all really wanted to do. But it was a change in the business model at Stock Charts, and we all have to make a living. So that is why we've all opened our websites. And honestly, I think that it is a good thing for all of the subscribers, in that you can, go and get much more detailed material now from your favorite bloggers. So anyway, so that's my little caveat on that one. I do, I'm excited about opening the new website, but I do, I'm going to miss the fact that I used to just be able to post whatever I had in my mind out there for free. So it's not something I was just, excited to do as far as opening something new. But as I got into this, I discovered that, hey, this is actually quite exciting. Now I can do what I really want to do every single day, and in more detail, and share it with all of what I like to call the DecisionPoint faithful. All right, so here is that website. There's our landing page. Of course, you can come in here and learn more about who we are and what we do. Of course, the most important page, besides our subscribe page, which gives you a little bit more information about our two products. Right now, we are running a charter member price for all of those people who are going to be our charters as subscribers. So we're giving you an extra good deal. And we're selling the two reports separately, but if you want to bundle and save on those reports, it's a great deal as well. So, and again, MV2020DP is the coupon code, and you'll get 2 free weeks to start yourself off. So our blog page you can get to even if you are a free subscriber. You'll find the free publications in here in one place. We do have free links to our show archives. I've done, gosh, Tom, we did so many workshops, and I've gone in and I found them and put all the links in here. So if you're interested in learning more about our PMO, you can get to that link here on our website, the life cycle of a decision point trade, et cetera, et cetera. So I have put all of those links in there. They are free. We also have links to the chart packs if you're a stockcharts.com member and want to add those. And the Decision Point chart gallery is for free actually on stockcharts.com as well. And we have the link there. But for members only, that's where we're going to have our sector chart list, the golden and silver cross, and the DP alert. And they look like this. So the sector chart list is very exciting in my opinion, mainly because we did put all of these sector chart lists in one. And these aren't live all day long. That is, if you want that sort of information, you do have to join Stock Charts. But if you just want to see what we're thinking about on a chart, we do update them every day after we've written our reports. So here is an example of XLC, and here are the cardinal tops for XLC. We've marked those. And then what we do, once we have that information marked, then we go down and look at what happened with our indicators. What did we learn that gave us information as to what the market might get ready to do or when it was getting ready to fail? And what we find is generally things get, as we call it, overbought, and you have most of the group participating with these, above the 50 and above the 20. I guess I should explain what our silver and golden cross is. So we have the silver cross on our sector charts. basically the golden cross, I think everybody's familiar, right? Those 50-day, 200-day crossovers. Well, the DecisionPoint long-term trend model is derived from 50 200-day EMA crossovers. And so what we've done is for all of the components within an index, or in this case within a sector, we track the amount, how many of the components of XLC, for example, would be considered to be on a buy signal for the long-term trend model. So the Golden Cross Index looks at the 50-200 day, and I don't have Golden Cross on these, I apologize, I think I said I do. What we do have is the Silver Cross, and the Silver Cross is based on our intermediate term trend model buy signals. So a stock index, whatever, will be considered to be on a buy signal if the 20-day EMA is above the 50-day EMA. And that's how we get the buy signals from our our intermediate term trend model. And so we took that information and have now plotted it. So in this case, when you look at it, we've got all of the components within the communication services index, and you can see from the black line what the percentage is of the members of XLC that are on intermediate term trend model buy signals. Their 20-day EMA is above their 50-day EMA. And right now, 92% of XLC members have their 20-day EMA above their 50-day EMA. And that is a number, as you can see, that is greater than all of 2019. And generally, I do get a little concerned when we get into this area. It is considered overbought. But right now, one of the things that I can say is that when you're in a bull market situation, overbought conditions can persist. And here's a really great example. Here you have some overbought readings, and for over a month, almost 2 months, we had those overbought readings, but we were in the midst of a bull market move. And so when that started to peter out, that was when we started to lose the signals. All those intermediate term trend model signals started to disappear. Now here is that stocks above 20 and 50-day EMAs. And like I said, we found some really interesting information on this. First of all, Carl has marked right here a couple of significant negative divergences that were going on back in April here, right? As we were starting to move up, and look, we were actually accelerating up at this point back in April. Yet, when you looked at the stocks within XLC, they were actually losing ground. Their price was moving below the 20-day EMA. So as we're accelerating upward, we're starting to see that weakness of stocks that were above their 20-day EMA. And then of course, with our gold and silver cross index, you can see that although we were in that overbought territory, when you look at the reading that we saw here, I'm going to take you all the way back, that's only about 75, almost 80%. We didn't get that high as we are now, but it was enough to be a problem. Right now, I'm going to be watching, and you can see we've started to lose ground here. As far as the stocks above their 20-day EMA, the prices are moving below that, which is fascinating, of course, given the fact that we are still seeing all of these silver crosses, these intermediate term trend model buy signals, but we're starting to see stocks losing some momentum here, more than likely because as you see with XLC, there was quite that pullback. So you can just go through and scroll through and look at some of the different charts. My Chart Watchers article I wrote, I believe it was it last Friday, Tom? I think I wrote last Friday or the Friday before that, but I wrote about what I thought was going to be the sector to look at going into 2020. I'll talk a lot more about that tomorrow, but as a little bit of a preview, XLY. is actually my pick for going into the new year. I think the XLK, of course, looks great. But what I like about XLY, and you can see the difference right here from the XLC chart I just showed you. We only have about 76% here on a silver cross. We are seeing a little bit of deterioration here in the stocks above their 20-day EMA, but certainly not like we were looking at an XLC. And stocks above their 50 is holding. And we are seeing a rise in the intermediate term trend model buy signals within those particular, the components of XLY. I like the way the OBV is confirming that move. You can see rising bottoms and rising bottoms on price. All of that is great, looks good. My main reason for picking it is that it is not overbought yet. Let's go look at XLK very quickly, and I will show you what I'm seeing on that chart. I hope I'm not making people, I know I'm scrolling quickly. There we go. So there's our, excuse me, the technology chart in our sector chart list on our website. And you can see that we're at 85 here. We're looking at 90% above their 20s and 50s, and this is great. You can see that we're getting more of a move to the upside here with the stocks above their 20. All of this is great, but my main concern is the fact that the PMO is overbought, and we're starting to see some overbought readings on the silver cross. And you can see we're also getting into somewhat overbought territory here, I would say, on those percent of stocks above their 20 and 50. So to me, I still think XLK will do great. I'm not saying that it won't. I just think that we're going to see XLY outperform. And yeah, I'd be interested in your thoughts on that too, Tom. I don't know what you're looking at as the sector going into 2020, but I really like XLY of all of those sectors.
Yeah, I'll be talking a little bit more about it tomorrow as well. It's easy to like groups like technology, I mean, because they've been so strong. But what a lot of folks don't realize is that these sector ETFs are not widely diversified. And so you need to really know what you own in terms of these different groups. I was trying to see, I had a spreadsheet that I had just done. And yeah, here it is. So when you look at something like the XLK, 38% of the XLK is Microsoft and Apple. So, you know, you're not just buying this huge, widely diversified technology ETF. 38% is Microsoft and Apple, which are not bad stocks. They've been great performers, but they're very overbought. They're very extended. Are they going to be outperforming everyone else in 2020? I don't know. After such a huge run up in 2019, there's a lot of good stuff that's, you know, included in those prices, I think, going forward. But if you look at something like you mentioned, the XLY, the top two performer or top two most owned stocks in the XLY is Amazon and Home Depot. And if you look at those charts, they certainly are not nearly as overbought. I mean, Amazon hasn't even broken to a new all-time high yet. And so as a result, yeah, I mean, I think you have better opportunity in something like the XLY. But the only thing I would suggest is that if you are looking at these different sectors, make sure you understand the components that make them up, because many of them have significant ownership in just 2 or 3 or maybe 5 stocks. And that's really important to understand if you're going to buy into ETFs.
Absolutely. Okay, so that was a kind of a run through our sector chart list on the website. The other one that we have is that DP alert one, and this is the one that will give you the charts that we write about every day in the DecisionPoint alert. Carl is curating this particular list, so when he makes annotations or changes, you will get them right away with you know, all of the stuff that Carl is looking at on a chart. The sector charts and the gold and silver cross indexes I will be curating. And again, anytime I make an annotation, we take that snapshot at the end of the day and you'll see exactly what we're looking at as far as the market in general. And, you know, having talked to my father and looking at some of the charts that we have been, I think that this S&P, it's for 1 year, it tells us a lot all in one chart. One of the things that we do is we do look at the VIX. It might look a little different to many people, but that's because we invert our scale. And it is on a log scale so that we can really see the moves going on. We're not as interested in trend lines. We find that with trend lines, it's generally better to not use a log chart, but that's a preference that we have. But with the VIX, we want to see everything. We're not looking at trend lines. We're looking at penetrations of those Bollinger Bands to the upper and lower side. We invert it because in our mind, the higher the reading is, that would be considered oversold. Generally, when you get that high fear rating with sentiment, you know that it's contrarian. If everybody is very fearful, usually that's about the time you start looking for that move to the upside. And you can definitely see how that works over time. It really does come into play here right before some of the major bottoms that you get. You do see that penetration of that lower Bollinger Band. We didn't get that yesterday. Instead of seeing the VIX moving to lower readings, it's now above that moving average on that inverted scale, and that tells me that the market actually is showing some strength, and it hasn't punctured that upper Bollinger Band yet. So I think we still have some we could move to the upside. But let's go ahead, and I'm going to look at my free chart list very quickly. So if we come back here, we do have, like I said, those free links. And I have, well, actually, I see this is great. I'm going to be able to go through this and see the stuff that I need to put on here that isn't on here. And one of those is my live chart list. But you can find that in the DecisionPoint blog that is on stock charts. So I'm going to take you over to their website really quickly so you can find where I write my free stuff. Like I said, though, you'll be able to see when I write free material over on our website. So again, you don't necessarily have to be over here to find us and find our stuff. But the DecisionPoint blog over here, and I'm going to add this link to the links on that left side for our website. But I have a live chart list that I curate on stock charts. It's free. And these are the charts I was using for my DecisionPoint alert midweek, because I wrote just once a week. Carl wrote once a week for the DP alert. And of course, like I said, now on our website, we'll be doing it twice. So it should work out pretty well. You'll get it every day instead of just twice a week. So, okay. Let's go ahead and looking at that golden and silver cross. This is for the S&P, and actually I think I'm going to come on over here to, yeah, this is the live one. I'll just click right over here. All right, so what I'm seeing right now, of course, these are the lists that you have as the golden cross. That is calculated at the end of the day, so this is just from, the readings are from yesterday. So right now, as you can see, the PMO is in that overbought territory, but the range normally is between -2 and +2. And you can see that we're now at a 1.49 reading, which is overbought mildly, somewhat, I would say. We could see that move higher. We are seeing that PMO starting to turn down, but of course, that's what you would expect to see on a move of over 0.5% to the downside right now, which is what we're looking at. The golden cross, 80, a little, almost 81% of the S&P 500 are on long-term trend model buy signals. Remember, that's the 50-day EMA being above the 200-day EMA. So of the S&P 500, 81% are on those long-term buy signals. And when you come up here, as far as the silver cross, the 20 is above the 50-day EMA on 81.6% of those in the S&P 500. Again, I see this as mildly somewhat overbought. I think we could certainly see higher prices. Like I showed you on, I believe it was XLC, we had a 92 reading, recall, on the silver cross. So there's certainly room to move higher here. And I honestly, I'm kind of liking what I'm seeing right now with this almost like a diamond pattern right now. And that's I don't have diamonds on the mind, but when you get that rise, the trend rising up here, it's easier to see, and it comes to that top and it starts to come back down. And you can notice here from those lows, it was coming down and then coming back up. It's sort of a diamond shape. And typically that, we don't talk about that diamond pattern very often, but it is a bullish pattern. So I would expect the market to continue to the upside in the shorter term. But again, we'll talk a lot more about that tomorrow. One of the charts I like to look at is what's going on in the global markets. And you'll see this one tomorrow as well. I have all on one chart, the DAX, TSX, you can read them. I don't need to read them to you. But what I like to do is just look at their price charts and compare what's going on there to what's been going on in the US. And one of the things that were noticing earlier last year and into the middle of the summer was that a lot of these indexes were still in bear market and still in bear markets. They had not gotten out of theirs. We had long time ago gotten out of our bear market, but not for the German DAX. Not at least until October did we see that declining tops trend line broken. You can see that the UK was also in that position. I've marked the current all-time highs for some of these prior when we were waiting to see what would happen. And you can see that the French market has made that breakout. The Nikkei is now back into a trading range. You can see that they've broken out of their bear market. What I found interesting is that Shanghai is still in a bear market. Looks like it's getting ready to come up here and break that declining tops trend line and finally get itself into more of a bull market configuration. There's probably all kinds of reasons that they stayed in a bear market, but I suspect that the trade wars probably depressed their market somewhat. And now that we're seeing that, seemingly coming together, their markets are starting to rise again. So I thought that chart was quite interesting, and that'll be posted every day in that DecisionPoint alert starting Monday. I do look also at the Dow, NASDAQ, OEX, and of course the S&P, but what I want to show you today are my ultra short-term indicators. We talked about the VIX a little bit already. Notice that that chart hadn't been updated yet for today. This is the live chart, and you can see that we're puncturing that lower Bollinger Band. That's a bullish sign. That tells me to look for in the next day or two a nice pop. I call them rally pops. That's usually what I look for right after we get these punctures of that lower Bollinger Band on the VIX, the inverted VIX. Just always want to make sure everybody understands that. I know it looks kind of strange for people, but oversold. This is an oversold reading with that puncture, so I would be looking for for a move to the upside there. All right, and there's our big four. So I'll just look at those really quickly, and then I imagine we need to wrap this up, Tom.
Yeah, you've got however long you'd like, but yeah, generally they've been going around an hour, so that would be perfect.
All right, awesome. Because I can talk and talk and talk. They had to give me the hook down in San Francisco at one of the presentations I did for the TSAAF, and I went in and I'm going to talk sentiment today. And I just went right through my sentiment charts, and I was still talking, and it was like, well, you need to give Mary Ellen a little time. So yeah, so just give me the hook if you need to. No so here is UUP. I was watching this double bottom, and it did resolve to the upside. It pretty much hit its upside target, and then it formed a double top, and it broke down, and the target would have been right down here, and look where we hit a couple days ago, and now we're moving on our way back up. I have been bullish the dollar. I was seeing it turn back to the upside, the PMO. I was seeing that move, that really nice breakout move. Of course, when we got this tail way up there and we had a close down here, that was when I was starting to get a little bit concerned about the dollar. I bought the dollar back in October when it broke out, and I had to sell on that breakdown. So it didn't come out to a very successful trade, but I'm starting to get it bullish on the dollar again. You can see the PMO is starting to decelerate here in oversold territory. And typically when you come out of those particular readings, you're going to see a move to the upside. So I'm looking for this rally that just started earlier this week. I'm looking for that to continue. Excuse me. Gold, what is going on with gold? Well, we finally got the breakout that I have been waiting for on gold for so long. We had a descending wedge. We finally got that breakout to the upside. The 20-day EMA is crossed above the 50-day EMA, which is great news. That gives it an intermediate term buy signal. The expectation has been a breakout to the upside, but boy, has it been taking its time. You could maybe look at this as a larger flag formation, but I think there's a lot of good for gold coming in. So I'm definitely bullish on gold right now. One of the things we do watch is sentiment for gold, and we calculate the sentiment by taking the Sprott Physical Gold Trust premium and discount readings. And they have a certain holding in their trust, and then people are basically bidding on it when they're buying PHYS. And so if they start buying it for more than what the holdings are there, then that means they're paying a premium. But if they're paying less than what's in that holding, then they're getting it at a discount, so to speak. So when you get the discount rates really, really high, that tells you there's not a whole lot of interest in gold at that point. And so a lot of times when you get these readings, you'll start to see a move to the upside for gold. And so that's why we watch that. At this point, we are still in discounts, so I am feeling pretty good. I'm looking for that move to challenge that top that we saw back in early September, late August. For oil, here we go. Yeah, I've got this chart a little bit bigger and stretched out here, so maybe that'll be a little easier for you to see. This is the chart that I actually turned in as one of my great calls of 2019. And that was back here. I wrote that I was starting to feel very bullish about USO. We were seeing momentum still rising, and it wasn't overbought yet. Then we started to see some movement on the scooter. We started to see a little bit of improvement here. And then this is just West Texas crude, so you can get a feel for that. But that's when I wrote my article, and then we had a 22% gain. So that was probably one of my better calls of last year that I could remember. I mean, I think I have quite a few of them, so had to search a little bit to pick the ones I liked. So one of the things that I noticed here about USO is that we had this ascending wedge. The ascending wedge is a bearish pattern. The expectation is a breakdown. And you can see back here, we got a PMO sell signal. The PMO had crossed below its signal line. And so everything to me was set up that we were gonna see a move back down and a breakdown toward that $10.50 area. Well, that didn't happen. We started to see a drastic change in the scooter. We started to get that move to the upside. The PMO flipped, gave us a buy signal back here. We were, like I said, the scooter had started to improve, and getting a breakout from a bearish pattern to me is especially bullish. So getting that breakout was great. But we're now getting ready to hit some overhead resistance. I'd say 1325 right now that we hit, and it looks like price is pulled back from. I think that could be a problem, but this April top will certainly be the biggest. It's been in a trading range for quite some time, and I think we're just getting back up to the top of that range, and then we're going to see a move back down toward the bottom of the range. And bonds, TLT is the other one that I look at. And this one, I'm going to stretch this out a little bit. With the holidays, I haven't actually updated a lot of these charts, so I'll give you a little bit of a move and sneak peek at what I'm looking at. So I have been looking at a possible reverse head and shoulders. The PMO had just given me a buy signal and it was confirming this rise to the upside. I was looking for the break to the upside here, but instead it hit that declining tops trend line and started back down. The good news is I'm not looking at this as a head and shoulders anymore because the pattern busted back here when it didn't make the breakout as I expected that it would. We just started to see it moving down. But now we're headed back up to the top of this, and the good news is we did not have to go all the way down and test this low, nor the bottom of this descending wedge. So this tells me that there's a very good chance we're going to get the breakout here that we've been looking for. And look at the way the PMO and the scooter and the OBV are set up right now. So on the OBV, you have rising bottoms, but on price, they're declining bottoms. That's a positive divergence as far as volume goes. You're seeing an increase in the scooter, the stock charts technical ranking. We're seeing that improving. And look at the PMO. It had a failed move and a top below the signal line, which is usually especially bearish. And of course, we saw a follow through on that decline. But now we've got the bottom. We're getting ready to give a PMO buy signal. So honestly, right now, I think the bonds chart is looking very, very bullish at this point. So I'm looking for bonds to take a move to the upside and get there and start challenging some of these tops that we've seen that formed the top of this wedge. All right, Tom. I've talked long enough, I think. My voice is getting a little bit... I've covered pretty much what I want to cover. Tomorrow, just to give you a teaser, I am going to go over sentiment. So you'll want to see that because I think there's a lot of interesting information going on the sentiment charts. And I am in the process of adding all of these sentiment charts onto the DecisionPoint website. I'm going to be putting that at the bottom of our Golden Cross and Silver Cross index chart list. So we'll have some more for you to look at. I didn't really show you this particular chart list, the Golden and Silver Cross, but it's so robust. We have the S&P 500, IJH, so you get your mid caps. You also have the small caps, and we can see what's going on on those charts. You have the NASDAQ, the NYSE, Dow Jones 30, of course. We have the transports, utilities, and NASDAQ 100. I mean, I can go on and on here. One of the ones that I think you might find interesting is we do the gold miners, Golden Cross and Silver Cross. So we look at all of the components within GDX and calculate how many are on intermediate term trend model buy signals and how many are on long-term buy signals. We're getting really overbought here, guys, at 92. But gold, as I showed you that chart, I think there's more upside to go. I think that it'll be able to hold those overbought conditions, you know, for a while. So just because it reaches that area doesn't mean we're going to immediately see a decline. And look at that PMO on GDX, really healthy buy signal moved into positive territory.
All right. Well, I'm going to make you save some of this for tomorrow.
Yes.
So I'm not gonna necessarily send the hook out, but I want you to save some of this for tomorrow. And for those maybe who came in later, I do want to just let you know that we are having Market Vision 2020 tomorrow, Saturday, January 4th. It's an all-day event. We've got our keynote speaker, John Murphy, joining us, and then a lot of my friends and fellow colleagues at Stock Charts that will be talking about 2020 throughout the day, how they're approaching it, using their styles and strategies. It's definitely an event that you don't want to miss. If you haven't already registered, make sure you go to earningsbeats.com, and at the top there will be a tab, Market Vision 2020. So go to earningsbeats.com, click on that tab, Market Vision 2020, and there will be a page there where you can register and make sure you don't miss out. I do think it's going to be one of, if not the best online event of 2020. Maybe I'm a little bit biased, but I know how talented all these folks are that are going to be speaking tomorrow, and you're not going to want to miss it. There were a couple questions that came in, Erin. So one, I think you went over this after, at least I saw it on the screen after the question came in, but one of the questions was, how much is your service, and do you show results of your picks over time? I know the website's new, but are you planning to have something that shows performance or anything like that? I think that was a question.
Well, yeah, and I think that's obviously a great question. The point of the Decision Point Diamonds, I'm not putting together a portfolio that we go back and look at all the time. The Decision Point Diamonds are to give you fresh ideas every day. If there's some good ones out there, like I said, I can't promise I'll write it every day, but if there's some good information out there, I'm going to show you and I'm going to tell you why. So the point of Decision Point Diamonds is not really for, you know, portfolio tracking. I do go back and look at some of those and I do write about those. That will be in free articles. I'll show you the performance. I think I wrote about, I think it was, again, I think it was that last Chart Watchers article I did, but I look at darlings and duds is what I call them. So I show you some of the ones that turned out, but I also show you some of the ones that didn't turn out. So no, I'm not actually giving you a portfolio. I'm not following all of those. I think you have a much better service, Tom, that does that. I'm not going to try and compete with that. What I want to do is show you how to get results from your scans. I'm going to do that for you and present them, and I'll give you detailed reasons about why I like it. I'm not telling you to go out and buy this. I'm telling you this looks like a pretty good stock. You might want to look at it more closely with your own analysis process, because ultimately the decision is yours. You know, if you're going to get in or out of it. And me tracking it, I mean, I guess it could show you the success, but if anybody watches some Market Watchers Live, if anybody has been reading my stuff for the past couple of months, you'll know that they perform pretty darn well. We usually get some good results out of them. I am an intermediate term trader, which is the other issue, is I'm not looking, you know, I'm not looking daily at like what the different changes are, even over a week. When I purchase something or I get something from diamonds, and I'll tell you that 95% of what I invest in comes out of those diamonds. So if anything, track record, I mean, I know that that's information that's interesting. I haven't gone back and checked it, but I can guarantee it's quite good. And I give you the reasons why I like it, and I will buy from those groups. I rarely pick up a stock that I haven't gotten out of one of my scans. So I'm showing you the stuff that I'm interested in, that I would possibly be buying. And I'll tell you at the end of the article if I'm going to be looking to buy it the next day and what I'd be looking for. So you'll get some information that way. So it's more of a real-time type of thing. So as far as our subscriptions, and see, I didn't even push the price or any of that. So if you go to our sales page, you can get the alert separately or the diamonds report separately. The Decision Point alert, that is for sure every day. So that is $25 a month. On Fridays, that is when you get Carl's Decision Point weekly wrap. So you get his look at what's going on during the week. At the end of the month, he does a monthly wrap. So you'll get that information from him every week. And again, we're going to be more detail oriented, and you're going to get a lot more information than you normally did because you're going to see it every day. Some people may remember when I did the daily blog behind the paywall for stock charts. It'll be very similar to that. And then the diamonds reports, $20 a month. And again, right now, you can save. And of course, if you want to buy it for the year, you can save. I think it's a really good deal. It was difficult to try and price it out, but I thought that this was, for what you're going to get, I think it's still, it's the best deal out there that we have. And you know, definitely check it out. If you want to bundle them, you know, instead of paying $45 a month, it's $40 a month. So you can get for $400 a year. Right now, you can get a whole year of both of these reports, a daily report of the Decision Point alert and a near daily report of Decision Point diamonds. So if you buy it at this charter price, it is good for the life of the membership. So it's not like the next time it rolls over, you're going to have to pay more. The only way you would have to pay more is if you left and then came back later, because then you're going to have to go back to what our regular price will be. But right now, it's definitely an excellent deal. So go on out and try it. And admittedly, you are going to be some of our guinea pigs out there, which is another reason why if you use that coupon code that is in here, let me go back and find that for you. If you use the coupon code MV2020DP, then you can get your first 2 weeks for free while I start ironing out a little bit of the content there. But we will start publishing on Monday, the first of our paid content. So you'll get the Decision Point alert on Monday as well as a Diamonds report. So come check it out. You can, like I said, subscribe. The first 2 weeks are free, and see what you think.
All right, there was one last question, then we'll wrap this up. But that coupon code, there was a question, where do you enter that? They were having problems finding it.
Oh, there was not an entry spot for that. It should have been in there. I will go check on that and make sure, but it should have, if you go in to subscribe, it should give you an opportunity to put that coupon code in. If it's not there, I will check it, but I will make sure, because I can go into the system, that you will get your first 2 weeks for free. I will apply that code for you if you're having problems. Just send us a note, support@decisionpoint.com. And I will make sure that that happens and we get you all fixed up so you do get those first 2 weeks for free.
Awesome. All right, you getting excited for tomorrow? Because I know I am.
Oh, I'm very excited, and I thank you for setting me up later in the day so I don't have to get up as early.
Well,
you know very well how good I am in the morning.
Yes, I set you up perfectly for that. And I also want to mention to anybody, if you were a newsletter subscriber for Market Vision 2020, you got a lot of emails. We've had these mini-series events. They were all free. We'd love to get some feedback, maybe to use for next year if we do this again, some testimonials. So, you know, if you've enjoyed these mini-series events, getting to know all of our speakers and all of the work and effort that Erin, my daughter Erin, and the rest of the Earnings Beats team, you know, it's been quite a collaboration. But if you've enjoyed all of this, we'd love to hear it. Please send us a note at support@earningsbeats.com, or you can send it directly to Erin@earningsbeats.com. But we would love to hear from you, and let us know what you liked, what you didn't like about the newsletter. We'd like to hear both. But anyway, Erin Swenlin, it's been great having you here today. Our final mini-series event has concluded. I want to thank all of our speakers for participating in this. Such a great time. Really enjoyed being part of it. And if nothing else, just you know, accumulating your questions for you. But it's been a lot of fun. I hope everybody's enjoyed it. So, Erin, thanks again, and we will see hopefully all of you tomorrow at Market Vision 2020. Have a great day, everybody.